Hi, this is the third complete comprehensive example in the chapter of cash flow statement. Let's go to example sum 3. Example sum 3. From the following balance sheet of Geo Limited and the additional information as at 31st March 2020, we are asked to prepare the cash flow statement. The balance sheet is given to the left of the screen, and on the right, the notes to accounts to the balance sheet is given. There is only one note, that's for short-term provisions for provision for tax. Below the balance sheet, we have additional information given. Building was purchased for rupees 75,000, first additional information. The second one, an old building with the book value of which was 63,000 rupees, was sold at a loss of rupees 5,000. Third point, tax provided during the year was rupees 80,000. And fourth point, dividend proposed for the years ended 31st March 2019 and 2020 are rupees 60,000 and rupees 80,000 respectively. We'll begin by listing down the ledger accounts that we need to prepare. Ledger accounts. The first one is the building account. The second account, we need to prepare the provision for tax account. As per the fourth additional information, we have dividend proposed for the years ended 31st March 2019 and 2020 given, which means the previous year's rupees 60,000 and dividend proposed for the current year's rupees 80,000. We will ignore the current year's proposed dividend and provide for as well as pay the previous year's proposed dividend. So we will prepare the proposed dividend account relating to the previous year's proposed dividend. Let's move on to prepare the ledger accounts. Building account. As per the balance sheet, the opening balance of building is 6 lakh rupees and the closing balance is also 6 lakh rupees. To balance brought down, rupees 6 lakh. By balance carried down is also 6 lakh rupees. As per the additional information, point 1, there was a purchase of building for 75,000 rupees. To bank account 75,000 rupees. And as per point 2, an old building, the book value of which was 63,000 rupees, was sold at a loss of 5,000 rupees. So the sale proceeds by bank account, the book value of 63k minus the loss incurred 5k, which is equal to 58,000 rupees. By loss on sale, 5,000 rupees. The balancing figure will be depreciation. The debit side total is greater, 6,75,000 rupees. And the balancing figure by depreciation account 6,75,000 minus 6,63,000 rupees comes up to 12,000 rupees. Depreciation is 12,000 rupees. So the building account is complete. We'll move on to the provision for tax account. Provision for tax account. Let's insert the opening and closing balances of provision for tax. As per the note to accounts, the first note, short-term provisions, the opening provision for tax is 40,000 rupees. By balance brought down 40,000 rupees and to balance carried down. The closing balance 70,000 rupees. And the additional information we have in the third point, the tax provided during the year was 80,000. So by statement of profit and loss for provision for tax, it's 80,000 rupees. The credit side is greater, 1,20,000 rupees. And the balancing figure is to bank for tax paid. ₹50,000. The provision for tax account is done. We'll move on to proposed dividend account. The proposed dividend relating to the previous year. We need to provide for the proposed dividend as well as pay off the same by surplus, that is balance in statement of P&L. The previous year's proposed dividend 60,000 rupees and to bank account for the dividend paid 60,000 rupees. Both sides balances with 60,000 rupees. The ledger accounts are done. We will move on to the solution, preparation of cash flow statement. Solution. Geo Limited. Cash flow statement. For the year ended March 31, 2020. Particulars. Inner column and outer column. We'll begin with Roman number 1, cash flow from operating activities. Net profit before tax and extraordinary items. This is as per working note 1. Let's prepare the working note 1 at the end of the cash flow statement. Working note 1, calculation of net profit before tax and extraordinary items. We'll begin with profit for the year. It's the difference of closing balance of statement of P&L and the opening balance. As per the balance sheet, reserves and surplus statement of P&L, the closing balance is 2 lakh rupees and the opening balance is 1 lakh rupees. So the net profit for the current year is rupees 1 lakh. There are no transfer to reserves. Statement of P&L is the only item under the head of reserves and surplus. As per the provision for tax account, the provision for tax for the current accounting period is 80,000 rupees. So we need to add provision for tax, 80,000 rupees. And we need to also add the provision for dividend which is made for the previous year. Dividend, 60,000 rupees. So the final answer for net profit before tax and extraordinary items is 2,40,000 rupees. We'll take this to the operating activities. 2,40,000 rupees. We will make adjustments for non-cash and non-operating items. Let's begin with the items to be added. Depreciation on building, as per the building account, there's a depreciation on building for 12,000 rupees. There is loss on sale of building. Amount 5,000 rupees. There is no interest specified for long-term borrowings or short-term borrowings. We have amortization of patents. The opening balance of patents is 50,000 rupees and it has come down to 45,000 rupees. So amortization, patents, 5,000 rupees. There is no other amount. The list of ads to be taken to the outer column, 22,000 rupees. We get 2,62,000 rupees. There are no items to be deducted. There is no gain on sale or interest received or dividend received, rent received, etc. So 2,62,000 rupees is operating profit before the working capital changes. We'll continue with adjustments for working capital. We need to add the increase in current liabilities and the decrease in current assets. Let's check out the current liabilities. There is a trade payables in the form of creditors which has reduced. So that has to be deducted. We'll move on to the current assets. Inventories has increased. That again has to be reduced. And trade receivables also has increased. That again has to be reduced. So there are no items for add. Let's move on to items to be deducted is decrease in current liabilities and increase in current assets. We'll begin with the current liabilities. Trade payables has decreased by 15,000 rupees. Inventories, it's increased by 5,000 rupees. And trade receivables has also increased by 75,000 rupees. So the total amount to be deducted 95,000 rupees. So we have cash generated from operations ₹2,62,000 rupees minus 95,000 rupees, which is 1,67,000 rupees. Let's deduct the income tax paid less income tax paid as per the provision for tax account. The tax paid 50,000 rupees. So we have cash flow from operating activities as 1,17,000 rupees. Let's move on to Roman number 2, cash flow from investing activities. We'll complete the items for building. Payment made for purchase of building. Outflow 75,000 rupees. Proceeds from sale of building. ₹58,000 inflow. There is a Non-current investments, it's increased from 0 to 75,000. So payment made for purchase of non-current investments, ₹75,000 outflow. There are no other fixed assets or investments which have been purchased or sold. ₹92,000 is cash used in investing activities. Roman number 3 is cash flow from financing activities. We look at the changes in the size and composition of capital and long-term borrowings or short-term borrowings. The share capital, the equity share capital, has increased from 4 lakh rupees to 6 lakh rupees. Proceeds from issue of shares, ₹2 lakh inflow. There's been a repayment of long-term borrowings. The opening balance is 2 lakh and it has come down to ₹1 lakh. So repayment of borrowings. This results in outflow. So minus ₹1 lakh. The short-term borrowings has decreased from 10,000 to nil. So repayment of the bank loan. ₹10,000. And let's check out the dividend paid from the provision for proposed dividend. Proposed dividend paid ₹60,000. Items are done in financing activities. The net answer is ₹30,000. Cash flow from financing activities. Roman number 4, net increase or decrease in cash and cash equivalents. In the case of operating activities, it's plus 1,17,000. The investing activities is minus ₹92,000. And the financing activities is plus ₹30,000. The net increase is plus ₹55,000. Roman number 5, opening cash and cash equivalents. As per the balance sheet, the opening cash and cash equivalents is 30,000 rupees. After adding 4 and 5, we get 85,000 rupees, which is equal to the closing cash and cash equivalents. As per the balance sheet, the closing cash and cash equivalents is also 85,000 rupees. I'll remove the split. We can view the answer. Example sum 3 at the top. The additional information as well as the ledger accounts to be prepared. The building account, provision for tax account, and the proposed dividend account. The cash flow statement, the first screen. The second screen. The third screen. The fourth screen. And the calculation of net profit before tax and extraordinary items as part of working note 1.